Hey, everybody. Today we're going to talk about achieving work life balance. I'm going to specifically focus on the challenges that arise if you're in the accounting profession and subject to all the tax deadlines in the tax year. So, if you want to learn a little more, stay tuned and let's get started. There is no profession on the planet more controlled by external forces than accounting. Whether you're preparing tax returns, filing quarterly reports, or keeping the books, there's always some date looming in the future that determines how you spend your time. Accounting professionals follow an annual schedule which revolves around a series of filing dates called tax season. Reporting deadlines are created by government entities and cannot be circumvented to give you more time with the family. So, how are you ever going to achieve work life balance when the game board is already stacked against you? There are two major components that manifest themselves as the villains in this quest to gain work life balance in your industry. The tax code, the filing dates, and the ever changing rules and regulations are as immovable as the governments that create them, and they hand them down to you like tablets to Moses on the mountain. The other elusive puzzle piece is time itself. Equally outside our control are the number of hours in a day, minutes in an hour, and seconds in each minute. When it comes to time, this playing field is unfortunately level for everyone. Some may get extra innings and others are retired early. But while we're in the game, we do not have the ability of making more time. So, manage your time better. That was the mantra of decades past. With the onset of digital calendars, people who were willing to project their schedules could plan out years in advance, down to the minute. These systems were useful and helped many people increase efficiency on how they spent their time. Micromanagement of your time can increase productivity significantly, but to have maximum impact, you essentially have to yield control of your life to your schedule. How long can you be a slave to this self-imposed life before you feel like you lost yourself somewhere in the process? The problem with projecting too far into the future is that we cannot accurately predict all the things that can disrupt even the best laid plans. And once a wrinkle does inevitably occur, we return to crisis management mode to get our train back on track as quickly as possible. Duplicate yourself. That's another time management tactic. Hire and train others to do what you do so that you can step aside and take more time for yourself. Theoretically, this is a brilliant strategy. All you need is to find a group of other people who are just like you, who are trained to think and react just like you do. Finding one or two such people is possible, but once you teach them all you know so they can fill your role, they'll take that knowledge and fill your role in their own company or become a competitor. If you can't change the system you're bound to use and you can't create more time, what if you just worked less? Well, think back to when you're getting started. You worked all the time and did everything yourself. Eventually, you hired administrative help, which allowed you to spend less time on busy work, but more time on other aspects of running your practice. It worked. So you grew. You got more clients, creating more work, and the need for more help, meet more deadlines, and this black hole of your successful career was formed. If you can't change the rules, you can't make more time, and building a bigger book with a larger staff only makes your job harder, then what is left if you want to have a successful accounting practice with true work-life balance? That is the $64,000 question, or maybe with inflation, $640,000. The first thing I want to challenge you with is to define exactly what your role as an accounting professional has been up to now. If you're experiencing any degree of the frustrating things I've described so far, you swallowed a business model which is now swallowing you. Your practice is structured on the amount of time spent doing work for clients, either by you or by staff. The work you do is more valuable and therefore more expensive than the work of your staff. Still, Time is money, and the only way to increase the amount of revenue is to create more billable hours from your office. Since time is a constant, you only get more billable hours by adding more people or working longer hours. Some accounting firms offer investment advisory services. The principals get the proper credentials or add in-house staff to handle these new areas. This concept's sound, and if the firm has the clientele and the cash flow to build that side of the practice to profitability, it could work. As any firm that experiences fluctuating business cycles will tell you, though, shedding valuable staff during downtimes can be as difficult as beefing up with the right people during a growing market. Affluent individuals and closely held companies are increasingly looking for a single source for all their financial needs. They understand the need for all their strategies to be coordinated to maximize efficiency and cost effectiveness. Many already run every business or personal consideration by their CPA before taking action. This token validation is a sign of where the answer to our impending question lies. The client who seeks input from their CPA for any outside financial proposals is acknowledging that they see their accounting professional as the one constant in their lives. The conservative reputation of a CPA becomes their strength when that client sees an unbiased and cautious evaluator of all things financial. Where the present accounting model fails the client and the CPA is when that CPA weighs in for free, then sends the client back into the jungle, hoping for the best. Studies have shown that 70% of all clients are either seeking or willing to change their accounting relationship. Are they unhappy with the quality or accuracy of the service their current CPA provides? Probably not. Are they interested in a lateral move to a different firm who practices accounting the exact same way, just with different faces? Probably not. Then why are these people willing to cut the cord in such great numbers? CPAs et al. Have earned the title the most trusted advisor. Do you have any idea how valuable that public perception is? Yet few accounting firms are taking full advantage of that fact and are essentially dying a slow death. Online and discount tax preparation has carved out the transactional business of millions of taxpayers. Some accounting firms are feeding just above this layer and creating price wars among themselves for slightly more sophisticated clients. The traditional CPA model does not anticipate the emergence of online competition, and therefore, the ones stuck in this mud at the bottom of this pond see that growing their business equates to doing more returns. We already talked about where this will lead. Firms that try to be all things financial to all people run into a similar amount of distress when they continually have to find new clients to make these additional operations profitable. Think about it. Even the airlines don't own the airports where they land. If you examine your current client list, you'll see they form strata based upon the services you currently provide them and the amount of revenue they bring into the company. There are people you'd like to cut loose because they are hard to work with and too demanding on your staff. Your model says you can't afford to drop these annual returns, so you keep serving them, likely at a loss. Then there are those that are like family, and you count on them year after year, even though the fees they pay barely cover the cost to do work for them. Meanwhile, the handful of your top clients are occupying the same space, just at a higher level. Their complicated personal or business returns may bring in far more revenue than those at the bottom, but they also require considerably more time and expertise to prepare. As tax laws change, you have to stay on top to make sure you're providing the most up-to-date information for these bigger fish. You do remember we were going to talk about work-life balance? Well, I wanted to first paint a picture in your mind of why everything you may have already tried didn't work, before I give you some hope that this dilemma can not only be solved, but can help you reach levels you never dreamed possible. So far, we've eliminated all the standard ways people have tried to grow accounting practices only to have less personal time available. Now we need to explore a different avenue that you may have considered but didn't really know how to get started. If I asked for the number of years you've been practicing accounting, I bet we would find the average principal has several decades of work experience. I did ask you earlier to consider what your role as a CPA was up to this point. With few exceptions, I would expect your answer to include the word taxes. Sure, that's what you do. Well, that's also why you become beholden to a schedule that's usurped your life since you entered this business. It's one of the two certainties, right? Well, have you had a discussion with your clients about the other one? I mean, in the saying, it actually comes before taxes. So why not? I mean, large estates still owe taxes after death. Isn't the finality of death a major concern of your clients? What happens when? Fill in the blank. By focusing on taxes, you've convinced yourself that you're helping your clients with their financial affairs, and on some level you are. How many of you can state the short, midterm, and long-term financial objectives of your most valued clients? Beyond saving money next tax season, where do they want to be in 5 years, in 10 years, in retirement? What do they want to have happen with their accumulation of assets or their business when they die? Tax reporting by nature is history. It's reactive. The income's already been earned, the tax laws are already in place, usually, and you're simply the storyteller. A good accountant knows how to tell that story in the most favorable way for the client, but they cannot change the major details that have already occurred. Tax planning involves preparing for the future. I know a lot of CPAs help clients choose a business entity, determine spending techniques for deductions and the like. These are tax planning strategies, but they're mostly short-term. What happens when the owner of the business dies, or their partner dies, or a key worker dies? Does your tax planning involve any of those? What if the owner became disabled for an extended period of time or could not go back to work? If your client has business partners, what are their goals in each of these circumstances with this shared interest they have in your client's company? Does your client ultimately want their business to be sold or stay in the family? Have they made better plans for that option than Joe Robbie? If a CPA is the most trusted advisor to affluent individuals, then who better to become the hub of all these conversations? Does that mean the CPA should be able to offer expert advice on all the specialty areas that will arise? No, they don't have to, if they have a team of other professionals they work with and trust. I know, you're thinking I'm talking about third-party referrals. If you've been around long enough, you've experienced the concern and maybe the disaster that can occur when one of these referrals didn't suit your client, and you suffer the consequences. Why would you ever want to go down that road again? Well, you wouldn't, and you shouldn't. Wait, I thought you were saying not to bring these advisors in-house because it's too expensive, but not to refer them out because they lack control? Exactly. Neither of those is what you want. Have any of you ever had a general contractor as a client? Or maybe you've hired one to build something for you. Think about the way they do business. They're employed by a property owner to build or remodel their new home, office, or building. Most contractors do not have a large staff of trade workers. They use subcontractors, people or companies who perform the specific tasks required on a project, like plumbing, electrical, HVAC, steelwork, wood framing, sheetrock, insulation, trim and cabinetry, painting, roofing, you know the list. The contractor is the one person on the job the client interacts with, and the one who makes sure that the work of each subcontractor meets the quality standards and follows the plans and specifications. You, as the focal person for all of your clients, can offer every type of planning and implementation of financial matters any of your clients need. All you have to do is find the connections to put the team together to construct whatever's needed. You could assemble your own group of specialists to put on speed dial, but that would not free up your time. It would actually require more of it. Instead, you need to find the contractor with the hookups already in place and make them your back office consultant. Where subcontractors are their own business entities in construction, The consultant and all the financial specialists are also separate businesses and therefore relieve the accounting firm of carrying any cost when not in use. When their services are utilized, the client covers the expense of the specialty firm. Unlike a referral, however, these team members are managed through the CPA and their work must pass through the accountant before it is presented to the client. This accomplishes two important differences. It keeps the client focused on their CPA as the one solving their problems, and it keeps the accountant in control of every part of their client's financial life without having to do all the work. Where this begins to give the CPA a different level of control over their time is that it creates a complete ecosystem where the accountant becomes the go-to person for whichever clients they choose. Expanding services far beyond just tax reporting provides a level of connection which helps lock the relationship between the client and the CPA. These fully served clients learn to rely upon their CPA, not just for tax returns or occasional financial opinions, but for everything. Let me explain what I mean by using the term ecosystem. All right, look at your phone. If you have an iPhone, I know you're proud of it. You paid enough for it. I bet you also have other Apple products like tablets, smartwatches, laptops, nanos. Now, even if you don't have an iPhone, think about if you use any other Apple products or if you're considering changing to an Apple phone or an Apple product next time you replace something. What Apple's done so successfully is create an ecosystem where all the products meld together so fluidly, it encourages users to become a single source customer. Since Apple and non-Apple products do not play well together, it discourages diversity among the devices used by an individual. To make a change would require more than just buying a new phone. When your practice can handle all your clients' financial matters, you too can create an ecosystem where it will be difficult for them to ever venture away from your firm. This relationship gives rise to a new way of billing clients based upon value added rather than time spent. What do loyal Apple customers pay for the latest iPhone now? Whatever they're charging. Why continue with a decreasing value per client, which forces you to increase the total number of clients with added staff needed to serve them? By becoming the go-to advisor for your top-tier clients and exponentially increasing their value to the firm, you can pick and choose how to spend your time with fewer, more stable, and more profitable clients. The CPA firm of the future will be a one-stop shop that successful business people will rely upon to handle all aspects of their estate and financial matters. The accounting firm will be able to assemble a unique virtual family office for every high net worth client, offering them a level of control over their financial lives previously out of reach. The accountant will be able to manage a short list of affluent clients whom they service throughout the year on a schedule they create. Tax reporting simply becomes another cog in the wheel of many tasks performed for this client. With a dynamic planning process in place, tax deadlines would become anticlimactic. For CPAs, EAs, and other accounting professionals, this is your best opportunity to get off the tax season treadmill. You can define your own market space in an industry which has long hijacked your ability to achieve work-life balance. You can make more money with fewer clients and smaller staffs. But first, you must step out of this narrow lane which confines your practice. Change can be frightening. People have a tendency to accept less of a certainty than risk more pursuing something unfamiliar. For those accountants who help create the stereotyped image of risk-averse professionals, or those who feel they're simply too old to plot a new course, I have another thought for you to consider. If you could double the value of your practice in the remaining years of your career, would it have an impact on the quality of your retirement? Where will your firm be in 10 years? More importantly, where will you be? If you see your future as more of the same and you're okay with that, I wish you well. But if you do not want to serve a life sentence to tax deadlines, then I hope I've given you something to think about. There is another way. This team-based model to which I refer is not conceptual. It's been implemented in other countries and in your own backyard for decades. It's not been intentionally kept a secret, but it does require an open mind to grasp how significantly it can and will eventually change your entire industry. As accountants, all of you understand the significance of that steep upward growth curve of something new. While this is happening, there's tremendous opportunity for those who are early adopters. Imagine being able to pick your clients and name your price for the work you do for them and essentially have no competition for what you offer. As you know, there will come a time when the unique aspects of this model become commoditized, and at that time, you'll lose the competitive advantage that currently exists. The model will still work quite well, but the ability to leverage it into rapid growth will diminish. As more accounting firms move their practice into this lane, companies like Amazon, who dominate their market, do so because they entered it early and perfected it. Other companies will arise and have success in the online retail marketing arena, but it is unlikely we'll see another Amazon, at least until some new business model is created which can differentiate from what Amazon does. I hope this has given you new ideas you can apply to your practice. Today I've attempted to open your eyes to a new way of viewing the role of accounting. The work you do for clients is essential in our complex financial society, but you can do so much more. By expanding your services to this comprehensive level, you will help usher in a new face of accounting for many years to come. Step outside your comfortable space and see what's about to change your life forever. You can lead the charge, or you can try to catch up when it runs past you. Your choice, your time, your life. Choose wisely, my friend.